Well, Mama always said buy low, sell high. So, how do you know the difference between low and high? Stay tuned and I'll show you.
The following is presented for informational and educational purposes only. This is not investment advice. Please consult your financial advisor. Thank you.
All right. So, is DVN Energy still in the tank or is there hope? So, DVN Energy is primarily a natural gas producer based in Oklahoma. It has been, I don't know, it's on one of Rick Rule's frequently commented lists. I think he has it rated a 4. He may have had it rated as a 3 as the price has sunk over the last year or so. So let's take a look here. So this is the monthly chart. We have going back to June of '08 and the all-time high. So it's been steadily downhill with natural gas prices falling at full capitulation around the COVID era there. So we had a recovery. Now we're kind of forming a triangle on a real high level. This triangle is 3 years. So we're forming a triangle, 3-year triangle on top of kind of the longer term downtrend. Now the chart's not perfect, of course. Few charts are, but it appeared. Let's do bar replay here. It appeared somewhere at this point. This is like, oh, okay, I'm gonna buy this this downsloping trend line, and away we go. This is it. This is the bottom. We get a little bull flag up here, but markets don't do what you want or what you think you see all the time, and so we had this little capitulation dip. Now, I don't have a full comprehension of that. I know that they bought this property called Grayson last year. It's fairly expensive, and it's kind of like have this breakdown playing the replay for you guys. So I don't have all the details on that. I haven't followed it that closely, but I mean that was about a $4 billion property, and it sucked all their cash flows. I think they had to take on a little bit more debt too. But anyway, natural gas has been up and down. So what we expect to, I should say, what we're looking for. When are we going to get sort of this bottom of this flag? So we're looking for a candle. I've spoiled it a little bit. Sorry. Looking for a candle with a really long wick as a capitulation signal. Take a peek at our. Okay, leave that down for now. So we have a candidate. We have a candidate right here, and this guy right here. This guy right there. This candle. And we're going to be looking for a lot of volume with the wick. So what the wick is telling us is that there was a level down in here. Okay, so this candle right there, that candle. So we have some capitulation indication in terms of volume, but it'd be nice to see. Let's see. It'd be nice to see support. It's right there. It's not as significant, but that's where the market is saying support. So we had a lot of limit orders. Let's check the weekly. Let's see. Close bar replay. Okay. And I had a couple of notes. Get to the notes. Get to the good stuff. Okay, so I had some notes. This thing had sort of rolled over, so I'm not touching it. I'm looking at this, the neckline here back last year. I'm looking at to break that neckline as an indicator, and we hit our head on it, went lower. So that was my note. Don't do anything till the neckline. So lo and behold, here we are again. See if I can hide some stuff. Clean this up. So lo and behold, we are kind of back to that neckline level. And of course, you could draw some trend lines here, there, somewhere in there. This shoulder level. So you also have a head and shoulders set up right there. So that particular potentially looks good. So anyway, going back to my original, this shoulder line is where we get pretty interested in the stock, and I'm going to show you why fundamentally in a second. So then we have a longer term trend line, kind of right on that. Okay, so fundamentally, all right. So we pull up. This is where it gets interesting. We pull up the latest quarterly results represented in the LQ. So for those of you who don't know, this is my balance sheet, income statement, financial analyst tool that I use for large company discounted cash flows. So we're just going to look at the health of the finances of the company. We'll walk you through it really, really quick. So we're looking at trends, revenue trends, for example. Let's just start there. We're going to go, obviously natural gas prices very low, COVID, etc. So we had extremely low, like 5 billion in 2020, and we've seen them recover probably roughly along the lines of the natural gas prices, maybe in terms of margins. And then we've been, we'll just call it steady for the last 4 quarters. Okay, so that brings us to a trailing 12 months of roughly, almost 10% increase over 2024. So that's looking good. From the point of view of stability, it looks like certainly in the last 3 years we've had roughly the same revenue. So let's go down and take a look at, on a cash flow basis, we have operational cash flow, relatively the same story. So I'll draw your attention to the big number in the CapEx. About half of that, and in other words, the amount that was over the 4 billion, about half of that was an acquisition of Grayson Mill. So this block here is an outlier due to a company acquisition. So kind of ignore that in our trend. Now look at the other guys. We're running at unlocking roughly 3 billion in free cash flow a year. That is a run rate of about 18% of revenue. Okay, so if we talk about like real revenue margins, real cash flow margins, these numbers, I'm assuming these numbers in CapEx are including, the regular upkeep and maintenance of the company and overhead and general administrative and all of the reinvestment that's required to sort of maintain those assets. So we have sort of a net operational cash flow and a net operational cash flow in terms of free cash flow here, and a gross operational cash flow in terms of operating cash. Okay. So really, end of the day, we're thinking this 3 billion is a pretty legit trailing 12 number. We've seen 4 quarters of stability there, and it's roughly averaging around 18%. Just quickly go through, how is their cash position doing? And for a cash, short-term debt is climbed up a little bit. Let's see, we're not diluting. For a while, we've not diluted for several years. And let's see, dividend is healthy. The dividend is 2.5%, 23% payout ratio. So we're retaining most of our earnings here. And let's see, going down. So let's do our forecast. I would also kind of draw attention to this number over here. Oops. This number here is called Z-score. I've got it highlighted sort of yellow. It is that just means it's C plus or C or whatever Z-score. Below it, we have more of the emerging markets and mineral Z-score. So it would have a good Z-score for those guys, but we're just sort of average. And that's reflective, I think, of the outstanding debt. So we've got debt to pay down, but that's okay because we're retaining, 77% of our cash flow to deal with investments and lowering the cost of capital and so on. So I do deal with, so I'll go through the discounting mechanism. So in order to deal with the high debt loads, I add 200 basis point load on the discount factor on my WACC. That gets me about 878. I've got my AI agent over here use 6.8. So I'm more conservative than my AI agent. So I'm using 878. I don't know, perpetuity growth rate of 2.8%, just kind of roughly with forward inflation. Cough. Let's see. And then so we plug in about 18% of analyst forward averages, and we get that 3 billion run. So we can keep the ball rolling at 3 billion. It's a fairly baseline-ish conservative with the discount load. So that's my conservatism is here in this discount load adjustment number right there. And we project all of those numbers forward, discounted back, and get a per share valuation of 83.77. I would draw your attention to this guy right here. This is a little elevated, so we're going to probably cost us some cash in the future to deal with that. I'm dealing with that risk right here in this 2%. Okay. So we've got our enterprise value to free cash flow. This is a 10 multiple on a company like this. We'd probably be thinking like a 15 right here. So this also reflects over discounting by the market. All right, and then of course they have a PE ratio, which is a little bit lower. But the real PE ratio, if you know or don't know, is this guy right here. What is your enterprise value? What is your free cash flow? So enterprise value takes into consideration the debt burden of the company, and it also takes into consideration the real amount of cash flow that's being unlocked by the business. So always use enterprise value to free cash flow to make valuation oriented decisions, not PE ratio. All right. So we're getting a discount of 1.18%. This is probably enough for this display. I'll flip back over. Here we are. $88. And where'd you go? Where is it? Right there. There we go. Okay, so my fundamental base case that I just showed you, it's up here. Now, lo and behold, we're at $77. So it was somewhere up in this zone is where I have kind of, that's the fair value of the company. Not with, maintaining current natural gas prices, not a $8 per billion cubic foot or whatever. Not a blowout scenario, just maintaining $5 or whatever. It's really worth up there. So we know in this bull flag, we're looking for some kind of capitulation point. The question is it this candle? You kind of have this weekly cross. Yeah, it could be. That could be it. And then, put together, we've got a higher low that has confirmed on the weekly. Higher low has confirmed. Get out of here right there. Very good. So, yeah, so for what I'm looking to do for my members, I will put in, when I get the right price, I already have a sort of long-term vertical spread here. I'm going to put that in and I will send the alert as soon as I get filled. I was trying to shop it today. I'm trying to get a really sweet vol surface discount on it. I think it's doable. The volume and the liquidity isn't spectacular, but I'd love to kind of add this one to the commodity accelerator program and have, because I just think this guy's going to turn, and that program, it could turn a 8x on this move. Okay, so I'd be remiss if I didn't share with you that, yes, I do have AI computing the discounted cash flow valuation of these large cap companies, and Devon's no exception. So let's just walk through the results of what my AI model said. So the summary is price target's 102.89. It's going to give the justification. That was a bit higher than mine. Mine was super conservative. I loaded 200 basis point risk load on the discounting. I'll show you the difference of AI's model and my model. So let's see. So strong cash generation, yes, captured that. Let's go. So here's a summary. It did a base case, bear case, and a bull case. So the bear case is still 91 bucks. It's kind of crazy. Fine. Weighted average cost of capital 6.8%. Yeah, I'm a lot of debt. I'm typically going to want to see 8 or 9% with that much debt. I'm just super conservative that way. So the higher the interest rate is, the less your future earnings, your future cash flow is worth. That's how the formula works. And so when I say I'm going to put some risk load in, I'm going to add a higher discount rate to lower my future value. I'm not interested in paying more. I'm interested in paying less. So I'm going to value companies conservatively. All right. So let's see. It used a 2.5 terminal growth rate. I had 2.8%, 1.3% CAGR. That's could be very similar to what I had. I didn't use a CAGR method. I used sort of just a straight percentage of the estimated. Analysts, they may have used CAGR. This company produces mostly oil and natural gas liquid. This company is a low leverage company. It has pretty much a 1-to-1 elasticity with the price of oil. So that should affect your position size. So I think I would rate this as a risk class of 5 out of 7, which take on a fairly large investment if you're committed to the company. That would be fundamentally. Let's see. Let's recompute company with weighted average cost capital of 9%. Okay, so we have our revision using assumptions that were similar to the ones I used. So now we're at 66 bucks. Ballpark, same area on our base case. So that is DVN Energy. Please become a member if you want to get these updates and learn how to do the commodity accelerator spread. And we'll see you on the next video. Thanks.